Welcome back to another stock market open live stream. Well. Today the question is, what kind of bounce will we potentially have? The Nikkei 225 was up about 10%, which is really good. It had a nice little rocket in the morning. You actually saw yields go down, or the yen drop a little bit, so it's sort of supportive of the carry trade. JP Morgan thinks it's only about 50% done. In other words, you got a whole nother 50% maybe to go in unwinding of the carry trade. Not exactly sure if that's going to unwind even more, or if we're at the end over there. But anyway, getting to a plus 10% on the Nikkei is great. If you go out to the 5-day, let me see here what they got. Right now, Monday, or the way the market ended Tuesday for Japan is still about 4% lower than where it was last Friday. However, that's obviously a lot better than where we were, Monday, where it was down 12%. So really nice, solid recovery there. Now, a lot of folks are saying this is a dead cat bounce for these Japanese players, and to be careful. Others are saying, no, there was a time of panic, time to buy the dip, and that dip is being bought. We'll see. We shall see. I know yesterday U.S. futures were a little bit more ambitious than they seem to be right now. It seems like you've got a little bit more sell pressure. Even with Palantir, after earnings, this one, which killed it, by the way, I'm a big fan of Palantir AI, they were up as much as 15%, sitting now at about 10.9. So there are a lot of folks on the U.S. side suggesting there could be some continued selling on strength in the U.S. just to take profits and further de-risk. The earnings and earnings guidance given by Palantir, when we incorporate this into what we've got right now, 2673, which is a bit of technical no man's land for the stock, you're still trading around 76.37 times earnings for this company. And growth is expected to be somewhere around, for the next 4 years, 22%. So you're still trading for about a 3.4 peg for Palantir. Now, it's a fantastic company, robust balance sheet. I think them and Tesla, they both have actual artificial intelligence, unlike most of the sort of AI knuckleheads, I like to call them out there. So I'm a big fan of their AI, not the biggest fan of the valuations, but we'll see. So then you've got the Qs, which were up as much as nearly 2% yesterday. Now in pre-market sitting at about 0.83. So this will be interesting to see where we go. But down about 1% from some of that. And you'll notice that since yesterday, when the market closed, Bitcoin's been relatively stable. Our market close, let's see here. Let's go to the hour chart. Let's grab BTC. Yeah, there we go. So market close yesterday would have been right around here. And we've been roughly in that same range since here, though right at market close was a little bit of a low, and then you start getting a bit of a tick up, but not too much. So this will be interesting. It could either be some profit taking that we'll see. We could be seeing a resumption in a carry trade over time. But it's very common to see a bounce the day after a brutal sell-off. Very common. And the question is, where do we go from here? Well, let's find out. Let's zoom out a little bit. This is our SPY right here. SPY is sort of also in no man's land between 472 and 550. And if we go to the day chart, let's see where we sit on moving averages. You can see here on the day chart for the SPY, we sit between the 100-day and the 200-day. We've got 519 will put us right below the 100-day. And on the Qs, roughly the same story as well. 437 will put us right around here. Also, almost perfectly in the middle of the 200 and the 100-day. So we'll see what happens. We'll also watch BTC as we go into the AM. I actually got NVIDIA up about 2%. Not bad. That's in the face of the delay of the Blackwell chip. But it's just expected to be delayed about a quarter. A lot of folks think NVIDIA can just push some of their customers over to other products like the H200. We'll see. But a little bit of a die issue with the the new Blackwell chip. Apple, even after yesterday being down 4.82%, still down 1.32% here in pre-market. Robinhood running a little bit, sitting at about 5%. And what else have we? Amazon's up about 45 basis points. Okay, all right. A little bit of a move here. Coinbase is at 190. Wow. And let's see here. Let's go to some other big movers in the pre-market. Lumen Tech up 47. Well, they must have had earnings. Let's take a look here. And what are you off? You're at $3.89. Boy, they really turned into a little bit of a penny stock there, huh? Touting AI fuel demand. Created new networks division to meet new demand. Will double intercity network miles over the next 5 years. In active talks to secure their $7 billion in sales. AI demand drives $5 billion in new business. Interesting. That's what they say. Okie dokie. So, Lumen is the trusted network for AI. Major partnerships with AI. So what exactly do they do? Oh, they got a few different things. Internet on demand. Secure access service. Edge. Edge cloud. Oh, they got a bunch of sort of cloud and DDoS solutions here. Huh. No idea. I don't know anything about this one. Whatever. So, okay. So, let's see the downside. Downside, you don't have a full pay. If you remove the short ETFs, which would be like 5 of them up here, you don't actually have that much going on the negative side. So you're probably going to get, I mean, Apple's over here. And then Wingstop is down 1%. Good, I hate Wingstop. But not too much over here on the bear side. So that'll probably fill up a bit as we actually get going on the trading day. So, did CrowdStrike report? Let me see. Let's see here. I don't know if that's true. Oh no. Will release Q2 final results August 28th. Oh. All right. Somebody here, right? Andre writes, hey, Kevin, is the Federal Reserve worried about jobs? Wouldn't that encourage them to bail us out of a recession because that would affect the jobs market? Well, it all comes down to where inflation is. See, that's the number one enemy. They won't bail the market out until they're absolutely convinced inflation is gone. So it's actually kind of funny. Like, yesterday was the first day that we had a sell-off that was like substantial in magnitude, right? I mean, we've had multiple sell-offs since about July 11th, but yesterday was substantial. And immediately everybody's like, "Oh my God, Fed, we need an emergency cut. We need an emergency cut." And it's like, whoa. You realize that's not how the Fed works. So like the amount of it's almost like the Fed is God, and people are like getting on their knees going, please Fed, please. If we can't get an emergency cut, can we get 50? Can we get 50? Please. And it's frankly, I mean, as somebody who studies the Fed a lot, the Federal Reserve is really good at screwing up by moving, unfortunately, historically, too fast. In the 70s, they moved too quickly. They led to a loss of the faith in the Fed. And they did the same thing, honestly, in 1958 to 1960, and he ended up having a double dip recession because, you know, as soon as they saw inflation waning, they drop rates from 3.5% to like 0.6 instantaneously. As soon as they see a slight bit of inflation, they start jacking rates up again. Boom, another recession. It's crazy. All right, I need to see what's going on with this device over here. But yeah, I'd be careful about betting on the Fed being nice to us. All right. Okay. There we go. Let's see here. Darn thing. There we go. All right. Solved. Okay. So, anyway, thought process here says the Fed won't cut rates if people still have the ability to spend. Job data would have to be pretty bad for an emergency cut. This is because bad inflation is worse than high employment. Exactly. I think that's well said. And remember, just because you have slowing employment, you still have positive employment. And even, like, I think the Fed's capacity is such that they're totally willing to even let it go negative. Let it go negative for a while. As long as they could fight inflation. Now, the downside is we don't really, and I don't know, maybe it's an upside. We don't really have catalysts to play for the next week. Because a week from today, we'll get PPI, and then the next day, we'll get CPI. So CPI consensus is 0.2, PPI consensus is 0.2. So we'll see what happens with those. I don't actually expect inflation to be bad. I just don't think it'll be as clear yet to the Fed that, oh yeah, we could be back at zero, right? Not that we necessarily even have to go to zero. But we shall see. Okay. So, what else? Let's see. Markets don't need the Fed to rally. That may be true too. You know, I mean, you've got a week here without catalysts. You know, maybe markets can have a nice little rebound rally. I was looking, it was, you know, Monday, it seemed like mostly hedge funds that were de-risking. A lot of retail hasn't de-risked yet. So it's not like you had this broad retail capitulation yesterday. So it's really all going to come down to, are we going to price in a recession or not? And unfortunately, that takes quite a while to determine. All right, let's see here. Hood has earnings today. Going long today. Nice. Is it today? Oh, yeah, today's the 6th. Yeah, they're after the bell. Let's see. Earnings can be catalysts. Yeah, that's true. That's just no economic data. So, like, Uber did well. Celsius reported as well. Let's take a look at some of them that came out this morning. So, Uber, Q2 gross bookings slightly beat. Delivery bookings slightly beat. Mobility bookings slightly beat. And the forecast, 0.75 midpoint. Slight miss on the forecast. Slight. Like, pretty nominal. It's up 8%. It's pretty good. Okay. Then Celsius reported. But, I mean, those aren't bad earnings. These slight beats, slight misses. None of that really matters. Okay. So let's write this down. We've got Uber. Slight beat on earnings and slight miss on forecast. Stock up roughly 8%. Celsius. Okay, here we go. sees challenges in consumer segment. I think it's easy to forget how important the consumer is. Environment, they're calling it. Okay, fine. Challenges in the consumer environment. No problem. Celsius saw some market share loss in July. Ah. Okay. Let's see here. They still beat. Q2, yeah, beat across the board. Okay, so it's not bad. Just some of their commentaries. I mean, it's somewhat in line with, honestly, what you'd expect at the moment. How about, let's see how they ended up doing. Celsius. Up 80 bips. Nothing. All right, how about Fubo? Fubo. Let's see here. Raises full year 2024 guidance in North America. Net loss 25.3. Fubo beat on revenues. Oh, it's good for Fubo. Wonder how they're doing. Oh yeah, look at that, up 18%. Boy, they went to $1. They have a $392 million market cap. Teeny company. Look at that bleed out. Wow. That's crazy. All right, how about Caterpillar? Caterpillar, an industrial. Let's find out what Caterpillar has. Caterpillar, Q2 revenue beat. Sorry, financial revenue beat. So that would be from loans. Actual revenue missed slightly. None of that massive big deal. Then you've got, let's see here, 2.5 billion deployed for repurchases and dividends. Q2 adjusted EPS beat 5.99 versus 5.53. And this is interesting. Caterpillar. Okay, so we've got mostly a beat. Mostly a beat on Q2, but sees Q3 sales and revenue to be slightly lower year over year. So slightly negative year over year. Restructuring costs about 450 mil. Okay, so probably not the best on guide there. Caterpillar, oh, but it's up 3.5%. That's good. A lot probably also slightly up because of the sell-off yesterday. Okay, not bad. Let's turn this on for a sec. 1 second here. There we go. All right. So far decent. Just as an initial sort of scalp here of the data. Ooh, Hyatt. I wonder how they're doing. Let's see here. Hyatt Hotels. Hyatt. CapEx of 170. Q2 revenue 1.7 versus 1.74 expected. Sees fiscal year revenue slightly lower than expected. Adjusted EPS beat, though. So slight lowering of guide there for Hyatt. They just have ticker 8. H, rather. It's kind of cool. 1-letter ticker. Hyatt Hotels. Slightly lower guide. Okay. Let's see what else. Global Foundries. Let's try that one. So, GFS. Oh, boy, that is way too much. What are you doing? There we go. Global Foundry sees Q3 revenue. That's a slight beat on forecast. Okay. and they beat on Q2 as well. So good for them. Global Foundries, Q2 slight beat, and guide slight beat. Keep it very simple. What else? As far as earnings, Trimble, I think that's in Kathy's space fund. They do a lot of, I think, aren't they the one that's like lasers and stuff like that? Like geotech kind of stuff. Anyway, Q2 adjusted EPS beat. Forecast for Q3 misses, though. Yeah, forecast a bit weaker on the bottom line. And actually top line rev. So let's take a look at Trimble. Well, down up a couple percent. All right, let's listen into here for a moment.
Even though the stocks have sold off, I don't think the fundamentals have changed in 2 weeks. No. You know, there was a little bit of a perfect storm, too, over the weekend with Buffett selling some of those securities. You know, he still owns $35 billion worth of Bank of America, a lot of other financials as well. So, you know, that gets included in the mix. But, you know, I stand today, I liked Wells Fargo a couple of weeks ago. You know, now it's a little bit cheaper, 1.2 times forward tangible book value. I believe
Wells Fargo.
Tailwind of prosperity, and I think they'll do well, and so it's another opportunity to buy.
You don't think at this point that the labor market is weaker than we're aware, or that it could worsen more quickly than we think? You don't. That's not in the cards.
So, you know, we look at stocks on a bottoms-up basis, and, you know, I don't really get into the weeds in terms of the economy.
So
and
not macro.
Predicting. No, we follow that, you know, and look at rates and so on. But in terms of, you know, analyzing one particular data point from jobs is not totally important to the work we do. What I would say, though, is that just the feedback we've gotten from the banks in terms of the trajectory, they're also reserved for, you know, higher unemployment of 5% by the end of the year. So there's some expectations of that movement in unemployment rate. So not terribly unanticipated as far as credit and all that concerns go. So it's one data point.
At this point, in terms of consumer credit or I don't know, loans, none of that is signaling a worse slowdown than what the Fed has tried to orchestrate, a soft landing.
Yeah, I think that's correct, just given the trajectory and the feedback we've gotten in July as well.
Okay.
And then, you know, just to talk about that, to the, you know, this lower 10-year rate over the last couple of days is you've started to see the mortgage rates come in,
right.
6.25 yesterday. And so that secretly will be an injection of good opportunity for the housing market. And that's a benefit to the banks as well that are owning AFS or owning MBS securities. And so that will help book values. That will also help refinancing and the whole housing market.
Do you
as well.
think that the 10-year, it can be almost things can get out of hand and it can go further down? I'm talking about the yield. And it's more of a psychological, because we take that seriously. When you see money rush into...
Okay, so I pull off that for a moment. So let's see here. Yeah, so Palantir was great in terms of earnings, and they are one of my favorite AI plays. Somebody here in the chat saying when rebuy Tesla. Me, I'm look. Friday, I went to about 2.5 on the bear bull scale. That didn't change yesterday. You know, a carry trade unwinding doesn't really affect the fundamental thesis for where the economy is. I think the economy is in a precarious place where there's a high risk of, and it's a high risk to me. Harris chooses Minnesota Governor Waltz as VP running mate. Oh. That's not, I think, whom anybody was expecting, but okay. But anyway, I think the risk-reward rate is not that great for stocks right now. And I'd rather wait until, you know, peak election uncertainty, especially since we're probably going to have a close match now relative to the slaughtering Biden was going to get. I'd be more tempted to buy stocks in October when people panic about the election, assuming we're not in a recession. If we're in a recession, you know, it takes a while for things to bottom. Your usual bottom after an event like yesterday, according to TS Lombard, is somewhere between 5 to 6 weeks. An actual recessionary bottom is usually between 6 to 24 months. So this idea of like, oh, it's green the next day, rebuy everything, God, no. No, this is not for me. So, anyway. Love Hyatt. The point's amazing. Nice. Yeah, actually, Lauren likes Hyatt a lot, too. She's a big fan of them. So, can you make a video on Waltz like the one for JD? Yeah, for sure. Yeah, we could definitely do that. Anyway. So, let's see here. She can have him. He sucked as my governor. That assumes you think she's gonna win. So said good earnings, dovish Fed would turn you bullish, but you're bearish to the growth script. Yeah. Yep. So unfortunately, what we saw last week was a good news is bad news reaction in markets. And what I've made very clear is sort of the overarching plan is if we have a stock market correction, I fear CapEx spending gets cut. When CapEx spending gets cut, we see job loss, and that begins the cycle. Now, I think I'm very early on that thesis still. You know, the Japanese carry trade doesn't affect that thesis right now. It could contribute to sort of a market sell-off. But unfortunately, what you're finding is markets are reacting less to positive CPI because they don't care anymore about CPI prints. And instead, sort of, you're getting this good news is bad news reaction at both earnings and some of the macro data, which unfortunately reiterates this fear of a market that's going to correct more than maybe it already has. I mean, you've already got a decent correction. And remember, we had more of a dovish Fed than we expected. So now, anytime you have market correction, you increase the likelihood of more CapEx cuts. I mean, obviously, we've seen exactly that at like companies like Dell and Intel. But once that starts happening at Google and Facebook and Amazon again, you know, that's when I really get even more bearish. It's worth noting Dell is down 46% from peak, and now they're cutting jobs. They're saying they're getting leaner, they're streamlining management. This is what you would expect to happen after the stock declines. And then you have another, you know, obviously you had the Intel layoffs, but that's just the beginning of the process. So the thesis I thought was good. I thought if we had strong earnings and a dovish Fed, we would be insulated from a market correction. That thesis was wrong. Because that thesis was wrong, I started looking and saying, uh-oh, what am I missing? And then when we look further at the data, we're like, oh, maybe we do have substantially lower upside and substantially greater downside. You know, I thought this was an interesting piece yesterday. I tweeted this. Follow me on Twitter if you don't yet, @RealMeKevin. But I thought this was very interesting. So there's a spread between the 2-year Treasury yield and the Fed you can calculate pretty easily. You know, just take 3.89, which was yesterday's 2-year yield, subtract it from 533, and what you get is negative 1.44. That spread has only been noticed the last times in June of 1989, right before the 90 recession, in January of 01, right before the dot-com recession, and in December of 2007, right before the 2008 recession. You know, this sort of combines with this good news is bad news attitude, what we're seeing in jobs, the fact that the Fed's not going to come in on their chariot and bail everyone out. So I think what you ask is a good question. It definitely takes a detailed answer. So hopefully that's useful for you. So, all right, what else here? Yes, but this time is different. Okay. So, let's take a listen in here briefly.
Scary. The headlines are very scary, right? Japan went from 0 to bear market in 3 days. The VIX at 65. All of that very terrifying. The swings that we saw in the Treasury market that shouldn't happen. But coming into this, it was from a really high level.
Yep.
And right now, we're really only down, 8% in the S&P. That's nothing compared to a normal correction. So we still have room to go. And that high level was achieved by mostly those 7 stocks. So when you hit the skids and you hit volatility, a lot of the stuff that has most of the gains and is the most liquid is the easiest to sell. It's the first to go. So it feels the most pain on the downside, which is what we're seeing right now. But I think that's okay too, because we needed a little bit of a right sizing in what's driving the market.
Look at what the bottom was in the put call ratio. The bottom in the put call ratio was July 10th. Right there, July 10th and 11th. Those were the magic days. And what I really wish is I wish we could go further back on this chart, because I'd really like to see the put call ratio during recession. I mean, I could get another chart, but you could see during last year's sell-off, we were well over 1 when we peaked out on the put call ratio. Yes, it started rising right now, but we're probably not fully there yet. You have had a lot of these turn to extreme fear. There's just one left. Net new 52-week highs and lows on the New York Stock Exchange. You're still in the greed level. So I remember I've been talking about this rolling over, and I'm like, as soon as you get all of them to roll over, that's when you're closer to getting a bottom. 1 to go, just 1 left. Kind of crazy. Okay, I want to look at put call ratio. Let's see here, CBOE. Put call ratio, and let's see, Y charts has a chart on it, and let's go, oh, okay, I can only go 5 years out. Oh, I'd love to go out more. All right, fine then. So you can see these substantial spikes at the end of 22. End of 22 was a really big era here of shorts. This is really when, stocks were bottoming in 2022. And then it looked like you had some elevated levels here in 23. I'd really like to go back further. Let me see if I can. Oh, I could go over here. Let's see. I'd like to go back to honestly, if I could go back to 1999, that'd be nice. I can. Okay, so during the dot-com bubble, between 2001 and the beginning of 04, your average was probably somewhere around 0.9 on the ratio. Plenty of spikes above 1. During 2008, plenty of spikes above 1. During COVID, lots of spikes above 1. Bond market sell-off end of 2018 and the end of 2015 above 1. We haven't been above 1 on this ratio since briefly on April 17th. And then before that would have been going into... Or between last year, where you were sort of on that 3-month sell-off into the end of the year there in Q3. I mean, that's also just one indicator here. And then Max is talking about the Shanghai Containerized Freight Index. Oh, yeah. Coming down slightly. Yeah, these prices have been a little kooky because partly because of the Red Sea. That's been contributing to substantially high prices. So, right. Okay. Let's see what else here. Yes, I've had to move nursing homes for patients because my sister bought the nurses found the nurses being negligent And sleeping while patient alarms went off. Yikes. No 0 days in 1999? Yeah, no kidding, huh? Somebody says, market is oversold. Is that true? Let me see here. Close. Close to 30 on the NAS. An RSI can get, you know, dirty negative, but let's go to SPY. Yeah, close to about 30. Oh, we just talked about Palantir. So, let's see here. Somebody says, Bitcoin won't crash to 20K. BlackRock Bitcoin ETF can't afford to have a crash with their commercial assets crash and the oil industry plummeting demand since... I mean, well, first of all, linking, I think the oil industry to BTC here is a little bit of a weak connection. But I will say, you know, BlackRock makes plenty of money no matter what the price of Bitcoin is in their ETF. I mean, I guess their AUM goes down if Bitcoin falls, but... And I don't know that just because they have an ETF means all of a sudden they can support the valuation. Load up the put needler. Yeah, nice. What's the plan for today? What calls? What puts? Yeah, that's the TBD. We'll look at that in just a sec. Tough to be forward looking. Yeah. Yeah, well, it certainly is. Certainly is. Pre-election trading, too much uncertainty. I expect it to get worse, says someone. Yeah. What's your opinion on the Indian stock market for educational purposes? Ooh. You know, I think that... well, first of all, I don't know much about the international stock markets. I pay very little attention to them. But I think if I was in another country, I'd be paying attention to the U.S. If the U.S. goes into recession, you know what they say, the U.S. sneezes, the world gets a cold? Strongly believe that. So I would really heavily be watching what goes on. Like, what you really want is a soft landing here. That would be great. Yeah. All right, good questions. So let's see what we got going on in the underlyings here. All right. So Nvidia's holding on to about 2.5%. Fubo's not holding on to its 17%. Caterpillar's not holding on. Hyatt's not holding on. Got some loosening here. Palantir is. They seem to be really holding. So let's write some price targets down. So yesterday the thesis was rally off the open. And that's what we got. Let's see what we got today. All right. So, Palantir should have positive momentum today. And it's in no man's land today. So, Palantir could be an interesting play if you really get euphoria in markets. Palantir 29.29 is what I'd be watching. If you get euphoria. I don't know that you will. Bitcoin's not signaling happiness, right? Bitcoin's slightly bearish. So I'd be watching that. It makes me less interested in calls. Tesla likes to push in pre-market. It's also a heavily retail traded stock. So you'll really have to keep watching to see what Tesla does at open there. You've got the Qs only up about 55 now. So the Qs are lagging a bit. They're kind of following the Qs of the of Bitcoin. Now, I wonder if some of that has to do with what's going on with Apple. Yeah, Apple's bleeding. How about the other megas? How's let's see, Goog 0.5%, MSFT 81 bips, Amazon pretty flat. Wow, I can't believe Amazon's not recovering more. That's crazy. Meta, you know, Meta has a tendency to run. So I'm gonna put them on the watch for a run. And Nvidia is between. I mean, if you get Euphoria, you go Nvidia 108. 108.08, if I remember correctly. Yeah. Okay. That's if you get Euphoria. I mean, so far the Qs are bleeding into the open. End phase, too little movement here. Robin to Hood. Oh, wow. In the pre-market, it got basically perfectly rejected at my 1767. So, watch that Hood reject. 1767. Okay. And what else? What else? What else? Embraer, ARM. Wow, ARM's at 110. Let's see here. State Street, new state research upgrades. Nvidia to buy from neutral. So ARM could be going to 117 if you keep the rally going. So ARM 117. What's my level here? Welcome aboard, Page. 170.63 here. Okay. I don't feel a lot of people dumped a house payment on Prime Day like prior years. Amazon shouldn't be right. Oh yeah, for sure the consumer has been much slower here. Yeah, you're in no man's land on BTC as well. I think it bounces off the 200-day DMA and back to peaks by December. What? The Qs? Yeah, so 200, we basically breached that briefly yesterday, and we're above that now. And so you're suggesting from here it's all-time highs. So your upside on the Qs, well, you were like 502. 503 was the top. Divided by 437. Oh, that's about 15%. Nice. So, yeah, it's interesting. I remember saying a few days ago in the course member live stream, I said, you know, I think 435 on NASDAQ is easy, and 401 is harder, and 369 is recession. And it's crazy how quickly we got to 435. So, but I agree, getting down to 401 is going to be harder. Every consumer part of Nvidia is down. As soon as enterprise stops buying chips at 400% markup, it's a wrap. I think that's well said. I agree with you. Yeah, if you've had a property for 2 years and you've been living in it and you can appraise it for more to get rid of your mortgage insurance, sure. You know, why would you not do that? Just confirm the process with your mortgage insurance. Until Powell gives the speech, we will not have a recession. the speech. ZI puts. What's CI? We do have Jackson Hole coming up. Oh, wow. Yeah, look at this one. So it's just been bleeding out, huh? It's a $3.6 billion company. ZI. Zoom Info. What do they do? Marketing solutions. Account management, prospecting, demand generation, data management. Oh, it leverages AI. Right. Okay. Let's see about that. So they have about 90 cents of earnings, and they're expected to grow like 9% over the next few years. Trading for about 10 times. Not the valuation isn't terrible, but it seems like the top line revenue growth is tiny. 0% this year, 0.9% next year, 7.2% thereafter, 3%. And those numbers could be wrong, obviously, as well. But it just makes you wonder, why is the growth so low on such a small company? That's interesting. Do you think gold would sell during recession? Are you wondering what the price of gold is? Usually in a recession, the price of gold goes well up. If you don't have a recession, though, if you have a soft landing, gold generally doesn't do that well. Ooh, does Super Micro report today? That would be very interesting. Oh, take a peek here. Oh, earnings are going to be juiced today. Supermicro, Rivian, Airbnb, Reddit, Win, Upstart, Toast. It's a decent little batch there. I like it. Wow. I just saw Amazon go negative. They were just positive. That's interesting. Oh, what's the breaking news?
Reporting that Vice President Kamala Harris has chosen Minnesota Governor Tim Walz.
Yeah, we already heard about this. Oh, we could listen to it for a sec anyway.
VP. This caps off just about a 16-day sprint to both secure the nomination for Harris and to choose her a running mate. With this pick, she's really going with someone who campaigned as a moderate and comes off like a moderate, but has governed like a progressive in Minnesota. He passed $1 billion for affordable housing. He passed a tax credit for low-income parents. He's really been in supporting these progressive policies. He campaigned as a moderate, though. He's also a hunter and a gun owner. So with this pick, yeah, he's someone who has sort of taken hold of the youth vote, gotten really popular on the internet. We know that Harris was going with someone who she was hoping would bring her a real electoral bump. With Minnesota, she's not quite getting that. Minnesota has been a reliably blue state since 1972, but he can likely appeal to these Midwest voters who might look at him, a former high school teacher, as well as someone who they can relate to. So we are still learning more about this, but that is one source confirming that Minnesota Governor Tim Walz will be the running mate. David, back over to you guys.
Okay, and not, it's funny, not bringing quite as much youth to the ticket, perhaps, as a Josh Shapiro would have as well.
That's right, and I think that's sort of what they were looking for here. Harris herself does not have a long resume in governing experience. She was only in the Senate for one term before she became the vice president. So I think they were looking for someone here who has a lot of executive experience, who is a little bit older, who has been in politics for a long time. Walz spent 6 terms in the House of Representatives and then became a 2-term governor. Also has that military veteran experience and that school teacher experience that he says has sort of made him this sort of entertaining, plain-spoken, folksy presence. He had to sort of keep the attention of high schoolers for so long. So he has that breadth of experience that I think they were looking for to sort of balance out this ticket just a little bit.
Okay, Megan, thank you. Megan Casella in Washington, D.C., obviously.
Nice. Yeah, we'll make a separate video on that, but very interesting. Kevin McCann says, I got wrenched. Yeah, we did a lot of wrenching last night. Where are you on the hard versus soft landing scale? Kevin or whole team? Just 2 people, myself and someone else. Just banged it out. We did a lot of wrenching. Where am I on the hard versus soft landing team? Well, look, I personally think inflation is mostly solved. But unfortunately, I think the Fed realizes that if they cut too aggressively too soon, you'll have a rally in risk assets, which could prop up the consumer, which if you prop up the consumer, you know, what you end up having is potentially reinflation. Now, I don't think so. I think supply chains have gotten strong enough. I think supply chains have exceptionally loosened, and I love that. I think it's wonderful that supply chains are this loose, because it's going to lead to substantial disinflation. So the question now is just, will the Fed react fast enough? That's the question, and I'm not convinced that they will. So I'm a little concerned about that. Oh, I see. It looks like this morning some of y'all have been asking for wrenches. Yeah, yesterday we had this caught up to 0, and now it looks like there are like another 50 of y'all who've asked to be wrenched. Everybody wants to be wrenched. Yeah. Anyway. All right. Let's go to the Doomburgers. All right. Let's see what the Doomers have.
BlackRock. And Gargi, what do you think?
Oh, thank you, by the way, Wild Skull, for the $4.99.
I mean, it's striking to me that if you took out the Magnificent Seven, the last 6 quarters have seen contractions in earnings, really an earnings recession. Now we're expecting that to broaden out and turn around. Is that coming to fruition?
It is a little bit, and I think that's what's very encouraging about this market. The fact that we are, especially this earnings season, seeing earnings growth come from the other sectors. We're seeing that in healthcare, we're seeing that a little bit in financials. And I think all of that is a really good sign for the broader markets, that it's not just coming from the same 5 or 7 stocks. I'll also say that under the surface, we are seeing a little bit of concern around consumers. Obviously, that's coming up a lot, and I think that'll be something that we discuss a lot more around the health of the consumer. And we're seeing that in some of the earnings transcripts around especially the bottom quintile or the bottom percentile of the income spectrum is beginning to show a little bit of weakness. Again, where that can go will determine how how some of these companies do, but which is why I think focusing on profitability and focusing on companies with strong balance sheets and strong profit margins is going to remain really important.
I need to also give you a bit of a, let's call it a victory lap here, for a very smart call you made about 2 weeks ago. At the beginning of July, you saw this tremendous rally in small and mid-cap stocks, and you look now, that entire rally has been wiped out. You were skeptical about this from the beginning. What is the big cautionary tale here?
Yeah, so the reason that small caps did as well as they did was right after that July CPI print, markets were pricing in cuts, and that was what was one of the biggest catalysts. And we felt that, of course, you needed to see those real rates move lower, but at the same time, you also needed to expect earnings growth to come forward. You needed to see that, which we weren't seeing. More importantly, I think we needed to recognize that small caps will only work in a period where interest rates are going down, but growth is remaining steady or moving higher. As we have since learned, again, no recession, but growth certainly isn't moving higher. So what has been more interesting to me is the move away from cyclicals to defensives, that especially as we go into the next couple of months into election season, I think there will be more investors that are gravitating towards some defense. Buffered strategies are a great way to play that. You can remain in the markets and protect your downside. Minimum volatility strategies is another way, and then utilities is a great way for investors that are looking for a little bit of defensiveness.
What if we get, we're going to talk to Tony Dwyer a little bit later, and he wants to see the Fed cut deeply. To counter, the massive hikes that we had when they were trying to thwart inflation, 75 basis points, 4 times in a row. Huge, right?
Yeah.
So, but if we get 50 basis point cuts, if we get, Connor Sen yesterday was writing, he wants to see 100 basis points in this year, sort of front loaded. do you then go back into the Russell 2000?
I think it will depend on why the Fed is cutting. So if they're cutting because of a growth shock, what we were pricing in yesterday as we walked into work, I don't think that's going to be a good time for Russell 2000.
But if, the Atlanta Fed says 2.5% growth in Q3.
If indeed we see strong growth, so 2.5%, exactly what we saw in the second quarter following into third and fourth quarter, if we see that strong growth as well as the Fed cutting, as well as, importantly, the Fed cuts moving its way through the economy such that small cap companies are able to allow themselves to have access to banking and access to the credit markets. I think all of that, the transmission mechanism matters. If we see that, then absolutely. For now, IWM, which is of course our Russell 2000 ETF, has seen a lot of activity, as you know, Matt, in the option space, call options, renters of the space, which we think is fabulous to
I want to just jump in there and say I actually totally agree with this lady. So the problem with deflation is it makes it very difficult for people to actually get the what's it called? How should I phrase it? It makes it very difficult for small caps to kind of keep rallying because you don't have the earnings growth. And small caps historically don't have the pricing power of larger and more capitalized companies. So I think she's right on with what she's saying here.
And there the conversation has to be around explaining to investors that, number one, if you move to cash at this juncture, and depending on how long you can hold it, you might
lock
not
in your losses.
You might not get that entire 5% that you see on your screen. And number two, bonds have finally, brought back that negative correlation. The normalization of correlations between equities and bonds are back. So bonds are giving you and can give you more of that protection. And finally, I would say that dips are very common in markets.
You mentioned the buffered
Yeah.
product, and I have to ask, how popular was that before this? I'm sure investors that got into those are happy that they had them.
Yeah.
And have you seen that popularity increase over the last
if we just
48
look
hours?
even over the last 24 hours in terms of how our Max J buffered ETF, which is the Max Buffer ETF, has traded a lot of volume.
They're basically saying, don't sell our ETFs.
Looking as well as a lot of clients asking questions and flows into that space. I think given this rise and vol, there's still a 10% upside capture with minimum downside capture. You don't get that in these markets. So a lot of questions. We hope that many more investors will take this opportunity to not move to cash, but try to preserve their downside.
Yes, please don't move to cash. Please stay in our stuff. Please, everything's fine.
We're going to talk a lot more about these markets ahead. Of course, we're getting a little bit of a bid back in the market this morning, but not by much. It certainly doesn't bring you back to where we
Yeah, no, you're not getting much at all. What do you got right now? Tesla 1.25 was bobbing around here. Bitcoin, I don't know. Bitcoin's been a bit bearish, really since we started the live stream right about here. Don't blame me. Actually, I started the live stream right about here. And it's kind of been down since the start of the live. Apple's dragging the Qs down. Wow, Robinhood, why? And dumping into the open right there. Amazon went negative. I don't know where Microsoft's trying to go. Oh yeah, let's throw the Qs up here too. Qs, Palantir, there we go. Oh, nice little rocket ship there on Palantir as the day's getting started. Could be retail. Sometimes you just pre-market, get a lot of retail buys. And it's not necessarily most sustainable. Ooh, CrowdStrike's up 4% today. Ooh, CrowdStrike, CRWD. Crowd. All right, so what's going on over here? Well, what's going on is they're bouncing off the bottom, bouncing off 200 basically. Wow. 231. Where do we sit on this? Wow, CrowdStrike. So let's go back to 2023 low. Let's see here. Let's retrace you down, shall we? 92.25 and 398.33. Okay, that hit. So 245 could be a little fib target, huh? Interesting. All right, well, a lot of that's going to matter as to whether or not we actually go up or down at open here today. Oh, here comes BTC. It's coming back. It's coming back. All right, 3 minutes to go. Here's CrowdStrike for you. And, yeah, Palantir's trying to push up here into the open as well. People expecting, oh yeah, look at that, getting a little bit of a push into the open. Q's, ooh, NVIDIA, 3.5. I think NVIDIA is probably going to go to 108 here. ARM, the hood, the Robin of the Hood, bit of a bid on Tesla. All right. Let's see here. Rivian, so okay. People will see when deflation of one category occurs, inflation of another will occur. It happens throughout history. Ooh. Do I see stimulus checks again in a recession? Almost certainly not. I think they've learned their lesson. You might not ever see those again. All right, let's go on over here.
We are expecting a higher open, a bit of a reversal from yesterday's significant downdraft. That said, you can see nothing like the numbers we saw in reverse at this time yesterday, although again, it can't be stated enough, we did come well off the lows of the session.
Right, I want to see the banks do better. You know,
yeah.
The banks, that's the epicenter of there's a recession, there'll be credit problems, but none of us has seen this yet.
No.
And people are just saying, they're presuming it. I'd like to see the banks go up, and I'd like to see the safety stocks go down. But I don't have that. For instance, this morning, Kenvue reported it's a good quarter. That's a pure safety stock, and that is going up much more than I thought. Celsius, which reported a good number, barely going up. So we have to keep track of what's going up and what's not. And, of course, we do actually, strangely, want interest rates to go higher. Bonds go lower, signifying that there's no real crisis.
Right, there's no, yeah, and to your point, the banks, again, came off the lows yesterday, but have acted badly for quite some time. It seems a bit early, perhaps, to be worried about credit concerns. I'd also point out Bank of America upgrades Apollo. I pointed to that a number of times because it's such a leader in private credit. It was down 21% in 3 days, that stock. I did point to it a number of times, Apollo. But again, to your point, the banks and the alternative asset managers, particularly those with a very important place in private credit, seem to be suffering from a concern about a deterioration in credit quality and what that could mean. Too early to be worrying about things like that?
I think too early. I mean, we had Starwood say good numbers and give you two dividends, give you more than just declaring one. They declared two. We have Simon Properties. These are commercial properties. This is not supposed to be the Achilles heel. They're both
nice job, Scott. MEK went with you on puts a few days ago, held those until yesterday. It sold for 400 to 500% gain. That's freaking sick. Congrats.
Well, you said there is no get tech squad, and scoffed at my view. I think that there's a considerable number of people who are not venture capitalists who are saying that Justice and the FTC have it in for big tech, and if Jensen Huang has 80% of the market, there must be something wrong. He said that's not true, but that's the prevailing wisdom.
Still to come, of course, you heard that from the field, but we'll see what the remedy is. Here's the opening bell here at the big board. CNBC Real-Time Exchange. You can see it's going to have a lot more green on it. By the way, doing the honors here, the Greenwood Project, introducing Black and Latino college students to careers in finance. Over at the NASDAQ, Neurogene, that's a biotech-focused company.
Pretty green.
Neurological diseases. All right, you know, bunch of earnings as well. You want to start there, Jim?
Yes, I do.
Red candle on NVIDIA, Q's red. Tesla's literally about to lose the lead. What the hell? Some crappy profit taking already? What is this trash? This is crazy. Palantir's holding on to 13. Q's holding on to 60. 66 bips. Yeah, Tesla's literally about to turn red. Affirm just lost the lead. Well, they went to 0. Tesla's bobbing around red right now. I'm watching Nvidia really closely. Palantir's giving up a bit. Q's giving up about 60 basis points. CrowdStrike giving up the rally a little bit. Google's barely green. Amazon's barely up. Microsoft popped up a little bit. Weird. About a quarter there on Tesla. Not what you had earlier. Let's listen in here for a moment. Oh, Palantir's going to come on?
Right. None had any plans to cut back on their capex. In fact, they only were increasing it.
So why don't we
What also is increasing is at least some doubt creeping in about the ultimate return on that.
Apple down 2% now.
You know, the reaction I got today from one investor in Palantir, the AI trade is real. That was their that was their reaction to these numbers.
Yes, and the critics are engaged in they're self-pleasuring. I don't know what to say.
Are you quoting somebody?
Yes,
there?
I am.
Okay.
Alex, he did not curse. I was very angry at him when he cursed, and then it got back to him, and I was angry. But I said, I have a lot of kids who watch the program. All right, then he quotes.
Don't go knocking his hobbies. That's a line from an old Woody Allen movie.
Don't go.
All right.
Don't go breaking my heart.
Yeah.
We're going to play a determinant role in making Americans allies again in the world. It's dominant. They closed 27 deals of more than 10 million. Is AI really meaningless? I do kind of love him. He founded his company, David, to be a ray of light to America. And
Tesla coming back. Q's now up about 90 bips. Now you're bouncing a bit. Palantir's only at about 11 now.
The chief revenue officer. It's production charisma. Now, Dave, that's the first time I've heard of that. I didn't get to ask Mr. Cantor about production charisma, and that would have influenced justice, or is that good FTC? Because that's better than the self-pleasuring that I'm reading about. Dave, what does that mean?
Would you really? I'll tell you later. It's a little late.
Is it about? Is it
Might be a little late for you.
AI term or is it a coding term?
Yes, it is. It's an AI term. AI can do that now.
Well, I guess you have to be a millennial, maybe a Gen Z, to understand exactly whether that's generative AI. Is it generative?
Stop.
It must be generative.
Will you stop?
Is this accelerated computing?
It's enough
David,
already.
is this what a large language model really is?
Yes, it is.
Figures.
Don't go knocking my house.
Heavens.
All right, knuckleheads. So watching Nvidia, looks like 105-ish, a little bit of resistance there. Usually it's the 108 level. Apple's not really going anywhere, not getting a lot of activity. Tesla's struggling a little bit around this spot here. Affirm down about 1.3, kind of bleeding a bit. Qs are trying. They're really trying to go up over here with Palantir as well. But you're just all over the place right now in some of these numbers. Robinhood's about to lose the lead. And yeah, Firm just legged down a little bit more. Tesla's barely holding on to anything. Oh, there come the red candles on the Qs too now. Now Robinhood goes red before earnings. Tesla red before, well, nothing. There's nothing really coming up right now. This is very interesting. There seems to be some reluctance to really keep these valuations up right now. And look at these ticks here. Tesla down 0.4. Apple now under 2. Okay. I mean, it's starting to sound like you know that place again?
The House of Pain.
Affirm's now down 2%. Tesla trying to bounce here. Nvidia, can't trust the green today. Look at that. Palantir barely now holding on to the 10%. The Q's giving up. CrowdStrike giving up. Bitcoin was the indicator. Bitcoin told us things are going to be a little, not so. They're not going to be a Nikkei 225. Enphase red. AMD's red. McDonald's is green. IWM, the small caps. VIX is obviously down. I mean, no duh. ARM. Wow. So what about Meta? Nope, not even Meta. So, and then what, Hood? Hood has earnings today? No. So the only thing, I mean, Apple. How's Apple with its bleed? Yeah. Kind of continuing its bleed. That's wild. All right. Let's see here. Yeah, not great at the moment. Yeah, Affirm's now down 2 and a chunk here. Let's listen to the Doomers for a moment.
Is it dead? You don't know. And it really, I think that is ahead of us, and it's what the unemployment rate is beginning to message.
Are you worried that unemployment is going to get higher to 5% in a swift manner? I mean, 4.3 is not too bad, especially if it's because of a growing labor market more than layoffs. But if the latter starts to come, it'll be difficult for the market to handle.
Well, Matt, as you know, I mean, we've been talking for a long time. And as we know, the unemployment rate, Goolsbee said it yesterday, the unemployment rate goes up on a rocket ship and down. I say it goes up on an elevator, down on an escalator. You know, the rates have to come down pretty hard because the unemployment rate doesn't go up slowly. That's what I meant. The unemployment rate goes up on an elevator and down on an escalator.
Yeah. Whatever, bro. Get your joke right. Okay, CrowdStrike's about to go negative, and the Qs literally rallied 90 basis points, and now what are you getting? This is what you're getting.
The House of Pain.
Yeah. You're what? Down to 0.25% up? Jeez.
Fetch me.
Okay. Wow, yeah, Nvidia just couldn't keep the bid either. Look at that bleed on Apple. It just keeps going. 2.4. I'm looking at it at 2%, and I have it written down. I'm like, if anything bleeds today, it's Apple. I'm looking at it at negative 2%. I'm like, I should buy puts. Okay. Tesla trying to bob up here around the 197 level. BTC is just bleeding out a bit too. And okay, getting a little bit of a recovery here. Okay, is that just sort of like beginning of the day sell-off and like now you're going to recover, everything's going to go good again? Is that this? You know, sometimes you see that. Let's see here. All right, let's go back to this guy for a moment. What does he have to say?
What direction is the employment picture going? It's worsening. What direction is consumption going? It's worsening. And those are the drivers, really, of the forward-looking economy. So then the question becomes, is it going to be a 2008 environment, or is it going to be like an S&L crisis in 1990? Remember, a recession happens when companies need access to capital, and there's no capital to provide from either the bank or private sources. I think it's the opposite today. The banks are in very good shape from a capital level. The private equity and private credit side are getting new money in every day. They're just unwilling to deploy that capital for growth until we remove the uncertainty about a forward-looking recession.
So if you have cash to put to work now, Tony, you know, there's over $6 trillion in money market funds earning a solid, 5%. Do you pull that out and make some purchases? Do you dollar cost average in? Do you buy some of these buffered ETFs that Gargi was just talking about? What do you do?
Well, so Matt, two things. Number one, I add into weakness in the broader market, not the S&P. I'm sorry, I am not able to. I'm not a research analyst for the top 7 companies or even the top 10, which now represent about a third of the S&P 500. So I would like to buy into a more equal weighted market in the smaller cap market, but I think you need a little bit more weakness. In terms of the $6 trillion, I want to dispel the myth that somehow $6 trillion can come into the equity market. The vast majority of that money, Matt, is designated as working capital in corporate America. So if you want,
I've mentioned that in videos exactly.
You put those millions of dollars in a money market fund because you haven't deployed it yet as a company, that's your working capital. You're not going to put that in the S&P 500 or anywhere else in the market. So the idea that there's $6 trillion waiting to come in, I think is totally inappropriate.
Agree. Yeah. Well, or rainy day funds. I mean, that's where families who do save are holding that cash, and they're obviously not going to go and buy stocks today trying to catch falling knives.
Certainly a lot of people out there thinking cash is the place to stay. Tony Dwyer, we thank you so very much.
Somebody says here, $5. Just realized the Fed meeting isn't until September. Yeah, it's the third week in September. But do remember you have Jackson Hole between now and then. So you'll get a lot of Fed speak and Fed speeches. All right, so Tesla is now down 2%. Apple is now down 3%. Robinhood's negative. Nvidia's not even up 1% anymore at 99 basis points. The Qs are literally dancing between my lines over here. And Palantir's only up 7. Oh, gosh. What happened? Wow. All right, well, let me see what's going on with yields here for a moment. Let's see here. By the way, thanks to all of those of you who are course members. Yeah, you get the blue wrench here, so you can chat for free in this chat when you're a course member. So that's cool. All right, let me see what's going on. So, yields, bond market. Up about 3.5 on the 10. How are we on the 2 years? So that's about 3.82. Okay, so we're still about 11 basis points inverted. Okay. Fine. Oh, my Lord. 30 years only up 2 bips. That's fine. I'm telling you, folks, your boy Kevin's a little bit of a little weenie bear. I really apologize. You know, I'm 2.5 on the bear scale, bear to bull scale. It's been that way since Friday. I don't know, but maybe you get a bounce here. I've been watching NVIDIA. I'm just kind of watching what this one does. Oh, look, it's right at my 100 line. Ooh, that's an interesting line. But, yeah, I not so much on a day-to-day basis, but a little bit of a recession bear. So, I'll definitely pick up calls to go swing stuff. But anyway, all right, let's see if Jimbo has anything for us. Let's see here. Let's see what's inside.
So advised.
Yeah,
and I think if Mars wants to buy the leading snack food company, I think they ought to listen to the data that you just talked about from people who don't snack, don't go out, have miserable lives, and have decided it's more important to be thin but not be seen by anybody.
They feel a lot better. They're healthier. They have much better health outcomes as a result of no longer being obese.
Have you ever had a Rice Krispie bar?
You know what? Never appealed to me.
Really?
But I've had my
the old
share of...
Walmart, I went to get rice cakes, and they sent me to the Rice Krispie aisle. The new Walmart, they have a whole aisle of rice cakes. Have you seen the great natural food aisle in Walmart?
I haven't lately been in a Walmart in a little bit. I do go, but I haven't been in
You've not. I don't think you've ever been. Name me one Walmart you've been to.
First of all, I've been to many Walmarts. As you know, I did 2 documentaries on the company.
The age of Walmart.
The Qs just lost the lead.
Lost the lead.
Yeah, I do occasionally head into the Walmart.
Well, the prices are low, and they have a great variety, and they actually have some designers.
Sometimes they have a great deal on Malamars.
During the
early
season.
In season.
'Tis the season.
Early in season, sometimes you can get them at a great price, and so I will head into the Walmart.
But how's Walmart doing now that you recommended it? Walmart, 40 cents. How's Cantor stocks?
The Cantor stocks. We do have...
No, people don't understand that the Justice Department is gunning, and they're gunning for great companies, and we have to take it.
I got one I wanted to mention
Apple
to you.
down 7.
I wanted to mention Builder's First Source to you. It's actually not down that much. It had been looking down a lot lower earlier. That company also out, I think, with numbers as well.
Well, but I had
it was in the pre-market. It was down, lowered.
Wow, man! I was looking at Apple at shorting it at 2%. Now it's almost at -4. I'm like, dang, man. But I keep saying that, and I'm not doing anything. I'm just like, I'm honestly, frankly, I'm in a bit of disbelief that there's this much red today. Now, don't get me wrong, I have shorts. Like, I bought shorts before the close yesterday. So, it's fine. But I'm surprised That's the way I put it. Surprised. It's not. I was not expecting. I was looking for green today, just thinking that okay, yeah, this market's probably due for a bounce-a-dude here. It's not really happening right now. I've got research here. Small caps falling behind. Thursday's jobless claims will be the next crunch moment. Yeah. Okay. So, what else here? Let me listen in here for a moment.
Murdoch in that interesting feud, right, where the irrevocable trust, he's trying to change the irrevocable trust. It was irrevocable, so it's hard to do that unless you can prove somehow
really
that what would happen under the trustees, I guess, would be, or what would occur potentially would be
everybody has to
bad
sign
for
an
those
agreement. Both sides.
I know,
Both
but
sides have to sign that in order to get that.
It's pitted
I've been in one of those.
Lachlan against
Really
some of his siblings. That said, good number. Or at least a number that's being responded to well. Obviously, a different strategy there, right? David, they're not about streaming. They're just about news and sports.
And the election's going to be
local
for
news.
them.
Yes.
Because of the amount of money that has to be spent. Particularly now, by the way, in Pennsylvania, now that Shapiro didn't get the nod. They have to just flood Pennsylvania.
It's true. I know. It'll be interesting to see what they choose to do there. She has plenty of money with which to do that now.
Yes, she does.
Having raised over $300 million.
And, as I said, Tony West would be integral. That's her brother-in-law who's taking leave from Uber. And Andrew Ross Sorkin mentioned, will he come back? And Dara said, absolutely. I believe if Ms. Harris wins the presidency, I would expect Tony West to not return. I expect him to have a key role. I expect him maybe even to be in the Justice Department. He was the number 3 person.
Yeah, he was.
I don't know if he'd do a guest tech squad.
No, you can take a look. The S&P is up, but NASDAQ barely in positive territory at this point. Had been down a bit. You can see. We've been talking about many of the names, of course, that power that index. Let's give you a look at the bond market, of course, before we head to break. Treasuries very important overall here, as you might imagine, particularly given yesterday when we saw the yields bounce on some of the other data that we got a bit later in the session. That 10-year still 3.8. So we saw 3.6 and change
Builder Source
yesterday.
could be helping Builder Source.
Could be helping Builder Source. Yeah. All right. We got 2-year also trading at 3.9. So we're back, sort of an inversion. We got a break coming up here real quick, and then we'll be right back.
Let's try the Doomers. And then we'll see what else we got too.
Kind of echoes the early days of Tesla's pursuit of profit.
Ed, I want to switch gears and talk about Uber a little bit here because you are seeing a lift in shares this morning and you're seeing them really coming in with better than expected results. How do you see Uber's kind of standing here in terms of worries about the consumer? They're really shaking them off.
Yeah. Well, at a macro level, if you put it in aggregate with DoorDash, you're getting a similar story, that the demand side of that economy is intact. So gross bookings on the platform, which is basically everything that transacts through it, minus tips, up 19% year on year. The bottom line, Uber's done very well. 50% of the transactions done on the delivery side were Uber One paid membership. So something's working in the business model, but it is very positive that they're able to sort of hold up this demand, particularly on the sort of more premium side of the platform. And the street really likes it, whether you use adjusted earnings or otherwise. It's a good story.
All right, Ed, thanks so much for joining us. Bloomberg Technology co-host Ed Ludlow has a lot to talk about on his program, so definitely join him with Caroline Hyde at 11. And don't miss our conversation with the CEO of Lucid in the next hour. Then tomorrow, we're going to hear from Rivian CEO RJ Scaringe, following his earnings report right here on Bloomberg Open Interest.
I actually think Rivian's very interesting. It's not like, I mean, they've finally gone profitable, which is really exciting. So, see how that sort of evolves. But, all right, anything else here?
Next, that and more in our Wall Street Beat. This is Bloomberg.
All right. Okay, so let's see here. Well, what else here? Okay. Let's see. Let's go with. Let's send the man, Apple's just getting beat up. Okay. Oops. Okay. All right, let's take another look here, and then I want to see some new what news is going on out there. Though I don't really see much in the way of news. We also don't really have catalysts, with the exception of earnings later today. So we'll watch that. Okay, I'm gonna send the. There we go. Okay, so Apple's our bleeder today. The bleeder leader. Oh yeah, there we go. It's the bleeder leader. That's what we're gonna call it. So Apple's the bleed lead. Where's ARM? I've been wanting to look at ARM. I did see that news on Lumen. Yeah, small company rallying. Like had a crazy pre-market rally. Wonder how they're doing now. I can look at them quickly here. Yeah, they tried pushing up more. I mean, this is about where they were in pre-market, about 52%. I'm trying to see. It looks like you're getting a little bit of a bottom on Affirm. A little bit of a bottoming process here on Palantir. Qs seem to be in a bit of a bottoming process. Hood bottomed. They have earnings today. Nvidia's looking for a bottom. Tesla's looking for a bottom. Apple's looking for a bottom here. There go the Qs to the upside. And Palantir sitting at about back to 8% now here. Amazon's still negative, though. Crazy. Okay, let me see what news there is. Let's find out here. Didn't seem like there was much. So, let's see. We've got, let's see here, Japan officials strive to restore calm. Uber post earnings beat as rideshare demand remains strong. Yes. Trade talks will always be better than the trade war. Okay. Citigroup Trading Division hit with fresh toxic culture claim. I always think that's interesting when you see stuff like that. It's like, yeah, it's workplace drama is what it sounds like to me. And then you see this stuff turn into like headline news. It's like, oh my gosh. First the crash, now the bounce. What's next, they say. Okay, well, let's see here. What is next? Let's see here. Well. That was someday yesterday. How hope you did. Bob. What happened? What's next? Okay, this is just some story. That's boring. Amazon, Microsoft keep up data center spending spree. Let me see how they're researching that. While fears of a U.S. economic slowdown pummeled the global stock market on Monday, hitting tech companies particularly hard, the decline won't affect big tech's plans to spend money, especially on more and better data centers. Microsoft, Meta, Amazon told us in their earnings reports last week they're raising spending. Yeah, for now, that's true. CapEx to hit $19 billion in the quarter will increase for the next fiscal year, blah, blah, blah. That's true. That was the big concern, is that spending more but potentially less revenue, or people should have lower revenue expectations from them. Oh, look at those Qs there. Back to that 438 level. Okay. Nvidia's trying to recover here. Sitting about 103. I maintain if we can get a rally going, 108.08 is the target here on Nvidia. If a rally can go. Yeah, does look like Tesla hit a bottom too. Palantir's really struggling to keep it up, honestly. I would have expected a little bit more momentum there. But, you know, I think most of the people who buy Palantir are retail, so they just buy immediately in the after hours. And then you don't really have any buying pressure left the next day. So, you know, you really need to get institutions in there. So, yeah. Anyway, all right. Investors bracing for volatility. What was yesterday?
Post Labor Day, when we're penciling in a lot of these bigger deals, the last real window when I talk to capital markets bankers, that's when the pain could be kind of more drawn out and more kind of dire for would-be issuers. Whereas, again, we're seeing the turnaround Tuesday not really play out. But the big question is what happens in the coming days and weeks.
Max says, look at ZI, straight down since open. Yeah, we had somebody join and talk about buying puts on them. Oh, now you're getting a little bounce. But yeah, 17%. My goodness. That's crazy.
I think you're lucky already if you're sitting at the Paris Olympics. Bailey, thanks very much. Bloomberg's Bailey Lipschultz there talking to us about the unwinding of the carry trade. Coming up in the next hour, Lucid CEO Peter Rawlinson is going to join us at 10:30 a.m.
I don't care. Predictions
And
on
by the way, just, you know, people use Mr. Cantor's from Paul Weiss. He's done a remarkable job. He's very, very intelligent. I've used Paul Weiss all my life. And I just say, the Justice Department has great lawyers. They really do.
Thanks, Jim.
Thank you. Wow, David, thank you.
Well, Supermicro is expecting to have 12% volatility. I don't know. It's going to be a really big one because, you know, if you start seeing data center weakness, which I don't know that, I think it's too early for that. You know, I think that comes closer to the election. So really your Q3 reports. I don't know that you're necessarily going to have a bad Supermicro report here. But you are already pricing in a 12% move. By the way, NVIDIA is now up 3.2. Apple's still in the hole, 2.5. Palantir sitting at 8. 90 bips again on the Qs. You literally went positive 90 to like negative 30 to positive 90. I mean, talk about vol. It's insane right now. Just crazy volatility on these plays. So Affirm just went green. Robinhood's still stuck around that 2.5 level. And then Tesla's still down 1%. Ah, crazy. Okay. So, yeah, there go the Qs. Qs just dropped about 15 basis points. BTC is not your most bullish friend today. That's something I've been watching really closely. Is like, what's BTC telling us? It's certainly up from what we had, you know, an hour ago. But not by much. You know, $400 or something like that. Really getting stuck there at about 55.2. Find that fascinating. So, I don't know. Not the greatest momentum, it seems, in either direction right now. Although there goes Lumen again. 58%. So, all right. Let's see what the Doomers have. Oh, they're on commercial. Okay, let's try. Fox busy. What is a carry trade? You should watch the last video I had on the main Meet Kevin channel. So just YouTube, Meet Kevin. It's the last video. It's all about Japan. Watch that. This is like literally the Japanese prime minister on the front cover of it. You can't miss it. Can't miss it. You'll learn all you need to know. So, everyone's on commercial, by the way. Kind of boring. Boring! A little bit boring of an open here. And it's like, everything's like hemming and hawing. You know, it's like, oh, we're going up. Nah, we're going down. Nah, I mean, maybe we're going up. Nah, we're going to go down. That's kind of what it feels like. Microsoft had a little pop. Amazon, not really. Oh, there goes Meta. I'm telling you, Meta, like, when there's a rally day, they're the ones that all of a sudden, you know, they'll go from, like, up 0.5% to up, like, 5%. I don't know what, like, how or why, but that one just does it over and over and over again. Far Real says VIX was 65, third largest reading in the last 40 years, yet market's still up 10% year to date. Doesn't feel like a cataclysmic event. Yet, I think people misunderstand the VIX and recession. Recessions take 6 to 18 months. You know, just because you had one freak out day with electronic trading and everybody with an app in their pocket, you know, making trades and volatility therefore spiking, it has nothing to do with are you going into a bear market or bull market. I will say, typically, volatility spikes closer to bearish markets. It just stays elevated for longer. And how long it stays elevated is what matters. Not so much the intraday peak, but how long it stays painful. That's what I pay attention to. So I look at it and go, okay, cool. So here, I'll show you. Jump on over to the VIX for a moment. And let's get our drawing up over here. Oh, where's my drawing? Day chart. There we go. So here's my downtrend on the VIX. You know, how long are we going to stay elevated above this channel? I mean, look at the week chart of this channel. We are at 30-ish probably right now. That's 15 minutes delayed, that price quote there on Weeb. You know, we're here. So we're well above this channel. And the what matters is how long we stay above that, not necessarily the extremeness of the move, in my opinion. That's my take of it. Yeah. So no one was making trades on their phone. All the brokers locked them yesterday. Weeble wasn't locked. Metkevin.com/Weeble, paid promotion. And also consider metkevin.com/life, another paid promotion. You got metkevin.com/Coinbase, metkevin.com/StreamYard, metkevin.com/Needler, metkevin.com/Gokart. We got a lot. Then there's, what's another one? Meetkevin.com/Mastermind. That's a high ticket one. That one's a pretty exclusive group. All right.
At least a 10% correction. The speed and the character of it, though, I think have been pretty extraordinary. That's why you have to watch for these aftershocks. We've taken the S&P back to where it basically finished the first quarter. I mean, that's essentially what we've done. And we've also taken the average stock down 12.5% off its highs, brought it back to where it approximately was 6 months ago. That's probably constructive in the sense of kind of resetting expectations and valuations. The NASDAQ 100 is down to back to about 24 times forward earnings, basically where it bottomed in April. It's not cheap. We were lower than that 22 times in October of last year. But just as a benchmark, a mental marker of how much has been done, you know, that has traded as high as 30 in recent years.
Yeah, I mean, we had this real flush out. You had a lot of forced selling yesterday, a lot of cross currents between asset classes as well. The VIX actually peaking at 65 at one point. You were out. You missed it. We always talk about the VIX. It had been so lackadaisical up until recently. But I think it all raises the question, Bob Elliott was talking about this in overtime last week, that perhaps for stocks specifically, it's not a fundamentals problem, it's an expectations problem, and that those need to come down.
The way I thought about it, I was saying this a couple of weeks ago, is you had an excess of certainty going into early July around a couple of significant things. Excess of certainty that we were going to execute the soft landing, that the Fed was going to do what the market expected for the right reasons. Expectations of the election were seen as a highly probable outcome and impact, and earnings were supposed to come through. All of that was happening. Not only that, you got this favorable rotation toward the rest of the market. Everyone got hoodwinked into thinking that could be a frictionless kind of handing off of the baton. That rarely works. So I do think that spike peak in the VIX is important. It shows you the sort of crystallized, urgent, forced activity I was mentioning. Now it's about whether it really recedes from here. We still have some seasonal headwinds to deal with as well.
Yeah, it always tends to be a contrarian indicator, too. Mike, stick around, because before we turn back to the markets, let's get to our Megan Casella at the breaking news desk following the Democratic VP selection. Megan.
Okay, Morgan, NBC News reporting this morning that Vice President Kamala Harris has chosen Minnesota Governor Tim Walz.
Good news. This is like the second time they're reporting this now. They're just bored. They're just bored. They're bored. There's no news. When they literally give you the breaking news alert on the same news over and over again, you know there's no news. Oh, they're talking about it as well. There's literally no news in the stock market. That's how bored they are. Boring. That's all I have to say. Boring. Boring. All right, whatever. I'll go make another cup of coffee and we'll go to the, what's it called? Course member live stream here. Tesla's only down about 0.5% right now. Ooh, you did get a little bit of a spiky dude there on the BT sizzle. Nice little up there. Still down about 2% on Apple. Nvidia's consolidating at about 3.25. I got the Qs stuck at about 90 basis points, a 438 line. Not a lot of momentum up. I will say. Like there's some, but it just feels like a low volume, kind of boring, low energy kind of day. Meta, yeah, there goes Meta again. Telling you, man, that sucker when it wants to go up 5%, it's an interesting one. When that one wants to run, it wants to run. I don't know what it is with that one. Yeah, Spy's up 1%. Infys, Lumen Tech. Yeah, come on, Nvidia. Bump it up, please. 108. That's where it goes today. If Meta goes up 5% today, Nvidia's up at 108. That's my call, baby. So, all right. Well, make sure you're subscribed to the Meet Kevin Live channel. That's where we do these market opens every day. Would love to have you. You kind of see my thesis evolve live. And honestly, this is boring. So I'm going to push the button. Love y'all, though. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. All right. See you in the next one.